I tell you what, if you didn't catch this move to the upside, it's probably been quite boring type price action for you. The S&P 500 today reached all-time high territory in a very dramatic move to the upside. But when you break this down onto the lower time frames, I mean, we're just talking gaps, ramps, camps. It looks like the stairway to heaven here. You're watching the Stock Market Brief Show. We're going to talk about the possibility for stock market volatility to peek its little head in again. This is the show that I use technical analysis and intramarket analysis to get a good idea as to where the stock market might be headed next. Let's get into today's show. All right, everybody, welcome back. We're looking at the advanced decline line, and there are some really bullish things to consider here, and we discussed this on yesterday's show, but what I wanted to call out here was the advanced decline line did break out to these all-time highs here. This is the cumulative line as well with the S&P 500, so the divergence is not there anymore. So this is actually a positive sign, but what I will call out is the advanced decline volume line, the NIAD, and this right here has been actually at a negative divergence. You can see a little peak here and then a lower peak, whereas we're putting in a new high in the S&P 500. And if you go back further, we had a peak right here, and it's clearly diverging from these all-time highs. The last time I showed this chart was during the death cross here, and typically these death crosses mark market bottoms, and we call that out, and we've been rallying up pretty nicely. One thing about the S&P 500, the SPY, that I didn't point out is look at just this dramatic move to the upside, okay? And then look to the bottom of the screen. What do you see? Well, what you should see, excuse me, I need some water or something. The volume completely dropped off a cliff here. So this thing has been ripping to the upside, but it's been doing so on just volume that is falling off a cliff, which, you know, we don't know if this is going to see some sort of uptick here soon, but so far, a big strong move on declining volume into an area of resistance. Little suspect in my opinion. Meanwhile, you take a look at the Nizhny-McClellan oscillator. You can see here big strong in the New York Stock Exchange reaching to all-time highs, but you can see here a small divergence here on the NIMOT. The last time this happened, we discussed it over here where we had one peak, two peak, three peak. Meanwhile, this was putting in a higher high, and this was putting in a lower high, and then we saw that move to the downside. Not necessarily that's what's going to happen, but it is something important to just be mindful of as it's in a little bit of overextended territory here. And then you take a look at the VIX. Okay, what do I mean by volatility might peak up? Well, first off, we talked yesterday about the expansion, the contraction of these Bollinger Bands getting very, very tight. Well, it broke to the downside, and it's at its lowest level it's been in for months. Meanwhile, though, you have a positive divergence still in. It's within a very tight wedge pattern. The last time this Bollinger Band was this tightly contracted I could find was right around here. And you can see it actually went lower than to a big gap up and then rallied up higher. Potentially that might be something that we see where it comes to fill in these gaps above us. But we'll continue to monitor that and see how that plays out. Another thing to pay attention to is the dollar. The dollar was up today. Meanwhile, the S&P 500 was too as well. So is the dollar going to continue to rally from this and have 93.5 active support? Well, that can put pressure on commodities, but can also put pressure on equities as well. This has been a very, very strong negative correlation. So when this goes down, we've been seeing the S&P 500 go up vis-a-vis. Meanwhile, also the BP-SPX chart, it's not quite that overextended territory, but it's not far off. It's not necessarily the place where I'd be pressing hard on long positions. I'd want to see consolidation or a pullback. And another thing to point out is the yields. Holy moly, are you paying attention to what the yields did today? Oh my goodness, we saw the 2-year rise just almost completely vertical. The 5-year, sorry, the 3-year, the 5-year, the 10-year, the 30-year, they're all up. And you can see the spread here on the 30 to 5 starting to point back down again. This is some interesting price action in the yields because we know this. When yields rise and the rate at which they rise, it puts pressure on big tech. And we haven't been seeing that. Or are we about to? Well, we'll get into those charts here soon. The FVX, this is the 5-year treasury yield on the weekly time frame. We talked about a bottoming pattern. Look at this thing just go. I mean, this could come up to 16, 14 to 16 rather quickly. I mean, it's breaking out of this bottoming pattern, and it looks very strong. And if this continues to see strength, meanwhile, the 30-year continues to just kind of doodle around in here, well, guess what? That spread is going to continue to flatten. It's going to start heading down, and we're going to watch ahead of time for the possibility for a 35 inversion, which I don't know if it's going to be getting there anytime soon. That's a way big look ahead, but you never know, right? We've seen it before. And we called that out on previous videos, and I pointed that out in 2006 when that last happened. Now, the 10-year yield, this is an inverse head and shoulders. Look at it's peeking its head out right now. It was up 6.35% on the week. We had a positive bullish crossover here on the PPO. This thing could start running here too. Now, I don't know if it's going to act as resistance up here or if it's going to really start breaking out. We are heading into, not next week, but the week after, I believe, is the FOMC. You know, are they going to keep rates the same? Are they going to taper? What are they going to do? It's going to be very interesting. There's a lot of reasons to believe that volatility, you know, especially with more earnings coming out, and we're in earnings season, and we have the Fed speak, that, you know, there's going to be more volatility. So we need to be careful, and I'll talk more about that in the conclusion. NASDAQ 100. Oh my gosh, I'm out of breath. NASDAQ 100 was up slightly on the day too as well, just kind of doodling around here, right around 15,500. One thing to call out, BP-SPX chart starting to crank up higher, not quite into that overextended territory yet, but it's just about there, not exactly the place where I'd want to press long. Now, this is where it gets interesting, and you probably have heard via the news or other videos. Well, we have earnings on Snapchat. There's some interesting stuff going around about how the Apple Play Store, and I don't even know. I didn't look too deep into it, but I wanted to watch the price action. Look at, they're down from peak to trough today, almost 30% after hours after reporting on earnings. And, you know, with the back of these yields rising rapidly and it puts pressure on tech, you know, this could be the start of more dramatic moves, and we might see. But not only Snapchat, look at Facebook, almost 8% down peak to trough there. So we'll see how this kind of manages and how it holds up going into the open. Perhaps we just get a complete just V-bottom bounce right back. But, you know, yields are, like I said, they're pressing up higher and higher. And if they continue to move, that's going to put pressure, continued pressure on these tech stocks. And then you have Google down peak to trough, 3.2% in after-hours session. Look at Intel down almost 10% peak to trough in the after-hours session as well. And then you look at Twitter down almost 8% peak to trough too. So you have some heavy hitters, some big ones to watch moving forward. Well, I'll get into that here in a second, but you can see here on the market dashboard, Dow Jones pretty much flat on the day, S&P 500 pretty much flat, NASDAQ pretty much flat, or up almost 0.5%. So pretty just lackluster day overall. And we discussed that in yesterday's video, how when we reach these, what the options market priced in the previous week, when we reach that move, it typically does this. But if we continue to drift higher, it could result in a potential squeeze. And I don't have the asset manager chart with me right now to feel on what sentiment is like with the asset managers, but I do know the reading, and it went from that 64 range to 98. So that was a big move in that chart. Now, consumer discretionaries led the way. If you break it down to look at the industries, well, automobiles leading the way on the weekly time frame. In 1 week, automobiles are up around 8.18%. Then you have home improvement, and then so forth down the list. And that doesn't surprise me all too much to see automobiles up there because of Tesla. Tesla is up tremendously. We were talking about it down here when it was coiling up right below 800. We said if we can get a solid close there with some decent volume above 800, well, this thing could rip higher. Well, that's exactly what it did. It ripped higher to its all-time high, and then we're touching into that today. We're getting very extended to the upside, and this could very well, you know, potentially take a little bit of a breather here soon. But we have to wait, and we have to see what takes place. If you look at that, it's on the 15-minute time frame with extended hours. It does seem quite interesting that once they reported, you know, it actually went downwards, but towards the market open, we just saw one big pull to the upside and then a continued consolidation. So this could be a bull flag, the start of a much stronger move to bring Tesla even higher than where it's currently at. Small caps continue to trend sideways. They were up very slightly on the day as we're kind of just right here at the upper range of this channel. So, you know, we'll continue to just watch this. I mean, it's very hard to say, okay, let's press long right here because it could easily fall right back down to 220 to even 210. And then if it breaks into this little channel right here, we still have resistance above us. So, you know, it's just a back and forth grind. You have to play the top as a short, you have to play the bottom as a long, and then you trade into the middle of this range. That's all you can do until we see a breakout take place. At least if you're being tactical, if you're just buying and holding for the long term, and then you just want to stop loss under here, there's infinite possible ways that you can create a strategy around this, but that's just kind of my take on it. And then you have the Dow Jones Industrial Average down slightly on the day, but it's still floating around these all-time highs. Let's look at some 15-minute charts just to get a good picture. We're going to wrap up in the conclusion right after that. 15-minute charts, not much going on in the SPY. There's no market discovery, no price action discovery. It's literally just gap ramps up a little bit and then just sideways throughout the day. And we've just been seeing that a slow grind higher. 5-day is sloping up, so that's positive, but we haven't had any reconnects, so it makes it very difficult to start positioning for some good, good setups. And, maybe, like I've been trading intraday, but I've been doing it significantly less just because there hasn't been that many setups. And some that I've taken, it gets this big move out of a breakout zone, but then on the day it completely reverses back and I'm stopped out at break even. And it's just like, oh, I just spent all day just to get break even basically trading. It's just been that, that time, and you need to be patient. You don't want to be in a rush in this environment, right? If you were lucky enough to catch this move to the upside, you probably witnessed a lot of stocks making huge runs. And now you might, if you missed that, you might be feeling the pressure to start moving money around, start getting into this trade and doing this or doing that. Or if you did catch it, you might also still be thinking like, okay, what's the next one? I want to keep this going, keep it going. Don't do that. Just be patient, right? Let the market come to you, create the trade plan. If it doesn't go well, just get out of the position, have the plan before you enter in. But we have a negative divergence here. The PMO does look like it's crossing over to bullish. We had that little burst up towards the end of the close. Let's look for reconnects. I mean, I'm not going to just jump into this long without any, like a 5-period reconnect or maybe some gap fills or something like that. So I'm continuing to watch. DIA, this is Dow Jones Industrial Average. I read you out the wedge. I still look at this as a wedge, but it is above the 5-day moving average, hasn't reconnected there for a couple of days, and it's on a negative divergence with a couple gaps beneath us. PMO is crossing over to bullish here too, so I mean, there's a possibility that we continue to rip here. And then you look at the Qs, also still rising wedge, no 5-day reconnect, just been hanging out. I'm looking for reconnects. We haven't got it yet, so you got to just be patient, right? I have some longs on, some, but now I'm looking to potentially look at short positions for the most part, but I'm just a little hesitant in this environment only because, I mean, the market is acting very, very strong as of right now based off of price. There's countless reasons to be bearish right now, but based off of price, it's hard to be bearish. We also have that negative divergence taking place right there on the RSI. Then we have the IWM. We had this little bull flag with an ascending wedge, and we broke out, hit the upper trend line, came back down, and then we kind of drifted higher. Now we have a little bit of a bear flag inside of an ascending wedge. So fractals here. And if we start breaking down from this, look for the 5-day reconnect. That's right in this confluence of this support. If we break down, it looks like we're going to probably get that gap fill right at around 230 or 223, sorry, right in this zone. So we'll continue to watch that. Let's wrap up with the conclusion. Okay. So we went over a few charts, and things are looking, like I said, overextended, to say the least. And what I wanted to point out is just to make sure that you're not running into anything because you feel like you're going to miss a move. Just let the price come to you. Even if the market rallied up higher, okay, and stocks rallied up higher, there's after a large just shot up like this, say if it presses up here, right, boom, chances are we're going to get a reconnect to at least right back here, especially with this extended of a move, all right? Most of the time, what you want to wait for is either a 50% retracement of the move. So say from here up here, that was a very strong move, so we can probably see a 50% retracement. That would bring us to the 50-day moving average. Then be ready to buy at the 50-day moving average. But if it continues to move up here and pulls back, right, we're at the upper range of this Bollinger Band on the daily. We've seen it press higher. But if it presses higher, chances are we'll see it retest this breakout zone. I mean, is that like crazy to think? A big move like this with volume that's been dying off and we continue to head higher and maybe volume doesn't even pick up much more? Chances are we're going to see that retracement. So just be patient. And then we have all these earnings coming out, and then we have on top of that, we have the FOMC, meeting the following week, November 4th, I believe it is. So just be very careful, okay? It's a time to just be very patient. Meanwhile, though, you have all kinds of euphoria going on. So I got to show ticker symbol DWAC, Digital World Acquisition, Donald Trump's SPAC. How much volume is that? Holy crud. Almost, what is that? Almost 500 million shares traded. This is bonkers. It is pulling a nice little bull flag here. And then we had the launch of the Bitcoin strategy ETF. You know, that's a crud ton of volume too. 20 million shares traded. Not doing so well, right? It flew up to the upside, gapped down, and rolled over. All right, so, there's just a lot of speculation. The last chart I want to show you is the one that I talked about in the beginning, and that's looking at tips over treasury bonds. And what this is doing basically is heading up from the bottom left to the top right. But in this last week or so, we saw this spike up to the upside. Okay, this tells me that the people are not believing still the transitory narrative, and they're believing it less and less as the rate at which this moves to the upside and outperforms bonds is heading significantly higher. Now, we talked about volatility potentially poking its head out. When you apply a rate of change, a 10-day period rate of change, and this was me just doodling around just to see if there was correlations. When you see these tips really outperform strongly at a strong rapid rate of change, where the rate of change on the 10 period comes above this red line right here, which is 1.3, I think it is. Shortly thereafter, you can see volatility. And for example, right here, right, it boom, popped up to the upside very shortly after. Right here, pop, got a pop in volatility. Right here, pop, volatility. Right here, pop in volatility. That's just a recent correlation that I've just kind of witnessed and been seeing. And you got to think, with the tips outperforming the bond market at such a significant rate right here, it may force the Federal Reserve's hand to taper sooner than expected. And then you got to really think how the market is going to react if they do decide to taper or raise rates very quickly. That, chances are, would help with the volatility narrative, or even the assumption, or, it just depends on how the market kind of interprets the data, right? It's up to what the market decides, I guess. But what I wanted to point out is we're reaching back up to these areas as the VIX has been kind of just pushing down to a multi-month low. All right, the last time it was down at these levels was right around July. Guess what? That was around where we saw this pop up here too. That was actually the last time I was showing it. When it hit this level, I said, okay, the last couple of times it's done it, we've seen spikes in volatility. Well, very similar area level on the VIX, very similar level on the rate of change between tips and treasury bonds as well. So, and I don't put too much weight on it, but it is something. It's data, and I'm just looking at the data and I'm just sharing it with all of you. The last one is obviously the lumber to gold. This one, it's still above zero, but if it does cross down through zero by the remainder of this week, which would mean that gold have to outperform lumber tomorrow significantly here, then we might be on a risk-off environment heading into the following week. So that's all I got for you, everybody, on today's episode. Hope that helped out, gave you some insight. I will be traveling tomorrow, so I won't be too active. And I'll try to bring out a weekly recap. I can't guarantee it, though, as I will be in Seattle. All right, see you later.